How we doing, everybody? Today is Thursday, December the 7th, 2023. We're just doing our self-directed IRA. We're having an interview here with Jack Malpass. He is with Next Generation Company. They are a self-directed IRA company. I think they are based in New Jersey, and I think they have other locations as well. But we're just going to do an overview of the self-directed IRA. I think it's a really good time for people to open up these accounts and be able to use them going into 2024 and beyond with the opportunities that are out there. And you can use these accounts to invest in more things. And that's one of the key features of it. And I'm sure Jack is going to kind of go through some of those things on what you can invest in. But the main point of this is to get you the information so you can think about using this tool to take more control of your retirement and invest in some more assets and some more things that you feel that you can get really good deals on. So with that being said, I'm going to bring Jack on here, and he's just going to go through his presentation. And if we have any questions or anything, we'll answer them at the end. Jack?
Yes, sir. How are you?
I'm all right. Go right ahead.
Okay. My name is Jack Malpass. I am the business development specialist at Next Generation. Our company is based in Roseland, New Jersey. We are a women-run company. We've been in business for over 18 years, and we are administrators and custodians of self-directed IRAs. And as I do my presentations, hopefully you'll understand how you can use your qualified retirement money to invest in alternative assets. So with that being said, I'll get started right now. So like I said, my name is Jack Malpass. We are custodians of self-directed IRAs. We're a woman-run company. And just a little disclaimer before we get started that we are not fiduciaries nor advisors, so we cannot give you advice on whether an investment's a good idea or a bad idea. It's purely educational. The whole idea of being self-directed is that you go out there, you find the investment, and contact me with the investment, and I will tell you if it can or cannot be held in a self-directed IRA. And that's pretty much what we do. Little background, Jamie is the owner of our company. She is a Forbes member. She's also a real estate investor herself. She's a women-run company, leading women entrepreneurs, wealth advisors. So she is very versed in retirement money for all kinds of investing. What is a self-directed IRA? The self-directed IRA is different from your regular traditionals or your Roth IRAs in that your custodian of your regular plans hold stocks, bonds, and mutual funds. Okay, so your Vanguards, your TD Ameritrades accounts are all holding publicly traded assets. Okay, in a self-directed IRA, we hold non-traditional assets. So holding stocks, bonds, mutual funds can be held in a brokerage account under a self-directed IRA, but it can't be held in a self-directed IRA. So we deal in the whole space of alternative assets. Okay, so self-directed IRA, we don't have a portfolio for you to choose from. Okay, you go out there, you find the investment, and we tell you if it can be held. Okay, so it's a great vehicle for tax advantages purposes. Okay, so your IRA with us would work the same way as your regular IRAs. Just the difference is that we don't hold your traditional assets. Okay, types of plans that can be self-directed. Okay, you can have a traditional, a Roth, a SEP, a simple plan. You could do solos. You could do a SEP. You could do covered Ls. You could do an HSA. Okay, so if you're looking, you have a traditional account or with a Vanguard, you can open a traditional with us. Okay, everything works the same way. The RMD age, your retirement age, your contributions. So on a traditional contribution, the most you can invest in a traditional is 6,500 if you're under 50, 75 if you're 7,500 if you're over 50. Okay. A Roth is a great vehicle for people who have a Roth and are looking to those tax-free vehicles. Okay, so you can move a Roth over to us. You can convert your traditional to a Roth. Everything works the same way. The good thing about a Roth is that if you are looking to invest using Roth money, your initial investment money is taxed, but anything you make above that is tax-free. So let's say you invest $1,000 into an investment and you pay the taxes on that $1,000. You turn that $1,000 into $2,000 as long as you hold that Roth for at least 5 years and you're over 59 and a half. That $1,000 that you made is all tax-free. Okay. Think about traditional and Roths. You can't take the money out until after 59 and a half. Okay. Even on a tax-free account, you have to hold it for 5 years and you have to be over 59 and a half to take the money out tax-free in a Roth. Okay. In a traditional, your distribution age, which is 73, is when you are required to start taking your distributions. Okay. You could take it out after 59 and a half without penalty, but you'll pay taxes on the traditional. Okay. And then at distribution age of 73, you're required to. Okay. There is no distribution age on a Roth. So after 59 and a half, you could take it out penalty free as long as you hold the Roth for 5 years. Now, that doesn't have to be 5 years with our company. If you already hold on a Roth, just takes 5 years and 59 and a half, and it's all tax-free dollars. Okay. The SEP is for self-employed people. Your contribution levels on a SEP are much higher than on a traditional Roth. So on a SEP, it's 25% of your compensation up to $66,000 a year. A simple IRA is for small business owners. The contributions on a simple are $15,500 if you're under 50. If you're over 50, you can add an extra $3,500 to that. This is for really small employers who don't have a plan yet. It's good if you have 100 or fewer employees. A simple is one way to go. Another way to do it is solo Ks. Solo Ks, again, is for self-employed people. Solo Ks contributions are $22,500 plus company match, plus a percentage of your compensation up to $66,000. So another good plan is a solo K plan. Okay, you have to between a SEP and a solo plan, you have to be able to talk to your accountant and see if you are qualified for it. Okay. Covered Ls are good for anybody who's looking to start their kids off with investing. Your contributions are $2,000 per child. It's a great way to help your kids start to invest. The one thing about the Covered Ls, though, the money all goes for child's education, room and board, books, tuition. So they can use money to invest, but all the money that's in the account has to be used for child's education. And I can send you more information about that. Health savings account works the same way as a Covered L. It's for medical expenses only. HSA's contributions are $4,150. And then after 55 and older, can add an extra $1,000 to that. Okay, so these are the types of plans that you can use for self-directed IRAs. Okay. Options for funding. One way to add money to a self-directed IRA is through contributions, which we just went over. Transfer to transfer. If you have a traditional with a Vanguard or a TD Ameritrade and you want to open a traditional with us, that's called the transfer. So you can transfer two like accounts. There's no tax implications because you're moving from one plan to another qualified plan that are the same. A rollover, you could do a rollover with a 401k. If you are looking to open an account with us from an old 401k plan that you have, you can roll the funds over to us. You could do it directly, which means you can move the funds right from your account with your custodian to us. Okay. Indirect rollover, the custodian would cut you a check, and then you have 60 days to do something with the funds before they tax you on it. Okay. A conversion is when you go from a traditional, which is a tax deferred event, to a Roth, which is a taxable event. Some people can like to do that. It's totally up to you on what kind of plan you want to open, or you want to move over to us from a different custodian. I'm sorry, I lost my spot. So these are the type of investments that you can do. Okay. If you're looking to do a real estate investment, okay, it has to be a new investment. It can't be something that you already own. If you have it in a custodian like my company, like a self-directed IRA, you could, and you don't like the custodian you're with, you could always move your assets over from your other custodian to us. But if you're looking to do a real estate investment, it has to be a new investment. Okay. You can't do any of the work on the property. You can't live on the property. And there's some other rules that we could go over at the time you want to discuss it. But these are just a small number of things that you can do. Some people like to do mortgage notes. Some people like to lend money from they don't even know that they could use their retirement money to lend money to other people. Okay. And we'll go over the people who you can and cannot lend to. Private placements, hedge funds, pre-IPOs. These are all things that you can invest in. The only things that you cannot invest in a self-directed IRA is cannabis, life insurance, collectibles such as art or cars, and S corps. Okay. And of course, stocks, bonds, and mutual funds. Okay. But that is a small number of things that limits you to what you can invest in. Okay. So you go out there, you look for an investment, whether you want to do notes, a promissory note, or you want to do real estate, or you want to jump into a syndication or a joint venture or a partnership. Please give me a call. Tell me the scenario and we can go over it. And I'll let you know if that's something that can be done and how it works out. So all of these things, by using your retirement money, this is where you get the tax advantage of using your retirement money to invest. Okay. All of these investments will be in the name of your IRA, not your own name. That's what keeps it tax advantaged. Okay. So the rent, all the any kind of gains that you make on any of these investments all go back into your IRA. Okay. So it's a great vehicle for people who want to, don't want to use their own cash and get taxed on it. This is a way to do it where you either be, tax advantage, tax deferred, or you don't pay any taxes at all. Okay. Prohibited transactions. As I discussed before, there are certain people who you can and cannot do investments with or transactions with. Okay. So these are just things that the IRS says you cannot do. So you can't lend money to yourself. You can't lend money to your family members. You can't buy a house for yourself or buy a car using your retirement money. These are for investments, not for your own personal use. Okay. Extension of credit. Like I said, you can't lend money to a disqualified person, including yourself. Okay. You are disqualified from yourself, so you can't lend money to yourself. You can't, go into an investment that somebody else owns that is a disqualified person. Okay. So these are just some of the things, and we could go over this when I know more about what you're looking to do and who you are buying your investment from. So these are just IRS guidelines. Consequences of prohibitive transactions. If you do something prohibited, or let's say you own a real estate investment in, you're going to go and you're going to do construction on the house yourself. Well, that is prohibited by the IRS. And if they find out, they will distribute all of your money back to you, plus taxes, plus they'll go back to all the way back to when you first made your prohibitive transaction. So you want to be very careful about the types of investments that you do, who you do them with, and what is allowed and what is not allowed. But I go over all of that with you, so you get a good idea. And I have information on all of this, so it gives you a pretty good idea of what you can and cannot do. Disqualified people. Like I said, you as an individual are disqualified from your retirement plan. Okay. Your husband and wife, your kids, ascendants and descendants are all disqualified. Okay. So like I said, you can't lend money to any disqualified person. You can't buy a property from a disqualified person. So this is just a list. Now, it says ascendants and descendants, which is mother, father, grandmother, your kids, your husband and wife. The people you can do things with are brothers, sisters, aunts, uncles, and cousins. So it's kind of strange that they don't let you deal or do something like that with a disqualified person, but you can do it with, like I said, brothers, sisters, aunts, uncles, and cousins. So it's very strange. But that's the IRS rules. And again, we'll go over it. If you have any questions, please let me know. So opening an account. Opening an account only takes about 1 to 2 days. So the two ways that you can put money into a self-directed IRA. One is to have some kind of qualified retirement plan. So if you have an old 401k plan, if you have an old 403 or a 403b or 457, or you have a traditional, a Roth, a SEP, as long as it's a qualified retirement plan, you can use the money in that plan to invest in a self-directed IRA. Okay. The only plans are you'd have to really check with the custodian if they'll let you use that money, are 401ks where you're still actively working with that plan, or a 457 or a 403b. But usually IRAs are not connected to a job. Okay, so IRAs are good. Old 401ks are really good too. Okay, so you'd open your account. You would contact the custodian of your plan and let them know that you're looking to move some of that money over to your self-directed IRA. Okay. Now, one thing you want to keep in mind is that whatever your investment is, you want to make sure you have enough in there for your investment. Okay. The only way you can put more money into your account is either through other retirement plans or through contributions, which we went over. Okay. So however much you're looking to invest, you would contact the custodian of your plan and you would liquidate that amount. Now, you're not taking it out of your account. You're just putting it into a cash position. So if you don't have cash in a 401k or in an IRA and it's all tied up in stocks, bonds, and mutual funds, you would sell off the amount you need and leave it in your plan as cash. You're not distributing it. There's no penalty because you're just leaving it in there. You're getting it ready to be moved over to us because we only take money from retirement plans as cash. Okay. Once your account is open, it takes about 2 days. Then we work with you on funding your account. You contact the custodian, tell them you want to do whether it's a transfer, a rollover, or conversion. You're going to move money from your retirement plan over to us. Okay. So our transactions team will work with you on the paperwork needed to start contacting your custodian and working on the funding. Now, custodians can take some time to get us the money. So that process is the part we have no control over. Okay. It says 1 to 6 weeks here. Most of them are very good. If you have a good working relationship with someone over there, and you can have the money wired to us, even if it's a rollover. Transfers work quick. But we're just putting this timeline in there because we have no control over how fast the custodian gets the money to us. Okay. The last part is we do compliance on every investment. So whatever investment you're looking to do, we would need that documentation from that investor or investment. So whether it's a private placement, a subscription agreement, an operating agreement. So whatever you're signing off as an investor, we take a look at this to the documentations just to make sure that there are no issues with it. Okay. Everything will be in the name of your IRA. So if you're looking to do a real estate investment, closing cost, everything is done in your name of your IRA. So no paperwork will be in your own name. Everything is in your IRA name. That's how the IRS knows that it's an investment in a retirement plan, and that's what keeps it tax advantaged. Okay. So, I know the process here looks like it takes a while, but again, the funding we have no control over. The beginning we do, and the end we do. So, this is an easy, streamlined process. Okay. There's documents to fill out. We work with you. We help you. We'll do whatever we can. But again, we don't tell you whether the investment's a good idea or a bad idea. Okay. We just tell you, yes, this is something that you can do in a self-directed IRA. But it's called self-directed because you go out there, you do the homework on the investment. You make sure that it's something that you're comfortable with. That you with any investment, there is risk. So all we do is tell you, yes, it can be held, and we'll help you through the process. Okay. If you have any questions on any of this, on any investment, please let me know. We go over everything. And I can send you we have white papers. We have a website that is full of information. And I hope that this is something that you guys maybe never knew about before. This is a great idea. But again, let me know what kind of retirement plan you have, how much you're looking to invest. And, this is great for some people who want to be very passive with their investments, hands off, where they might want to join and do a syndication and not have to do anything, not have to worry about anything. Or if they're getting into, real estate, there are specific things that you can and cannot do in a real estate investment, but I go over those with you. So, it's a great vehicle for people who don't want to use cash or don't have enough cash and think, well, maybe, I have some kind of retirement plan. Okay. Run it by me. We'll talk about it, and I'll do whatever I can to help you. Okay. So my phone number is there. My email address is not, but it's my first name, Jack, Jack. My last initial M is in Mary, at nextgenerationtrust.com. If you have any questions, you can reach out to Mr. Ross. I'm sure he will give you my information. Well, that's about it. If anybody has any questions, please let me know.
I have a question here. With the limitations on what you can contribute, let's say someone does have an account at an old employer or their employer now, and they want to move it over, and it's, let's just say, $20,000, $25,000, and they want to move it into one of these accounts that have a certain amount that you can contribute per year. How does that work?
Well, if they have money sitting in a retirement plan, they can move that over to us, and they can still do their regular contributions. Okay. They can contribute to our plan. They can add more money to the retirement plan. However, if they are contributing to another IRA, then depending on what kind of IRA it is, they would have to subtract the amount that they're contributing from another plan to this plan. So let's say they're doing a traditional and they're contributing to another plan. Okay. Well, contribution level to a traditional is 6,500 if they're under 50. Okay. Let's say they're contributing 3,000 to another plan. Okay. The most they can contribute to an IRA with us is 3,500. Okay. So it's not 6,500 per IRA. It's 6,500 combined. Okay. So they can't contribute 6,500 to a traditional with us, 6,500 to a SEP, 6,500 to a Roth. Okay. It's 6,500 all in on all their plans. Okay.
And they can't go over that, you're saying, at all?
Not if they're under 50 years old. That's the most they can contribute. If
Okay.
they over contribute, then the IRS will get involved, because they will find out, and there's penalties for over. You're going to have to go back and see if you can adjust it. Contact your accountant or your financial advisor, and there's ways that you would have to go back and take the money and bring it back out again. It's quite a process if they over
Right.
contribute. So
Okay. Okay. So would it, I mean, so how do people deal with having multiple, of these accounts? I'm pretty sure that, some people may have something to cover Dell for their children, and then they may have something as a married couple or a single person may have an account that they focus on as well. So how does that how does that work being capped off? Is that the same thing? Like you can only put so much into the Coverdell and so much into your own account each year and at the
well,
at the cap?
the Roth contributions are for the kids, 2,500. I mean, anybody can contribute to that plan. Grandma, grandpa can put money in for the kids. Um, but as far as Roths, there is certain limitations on how much can contribute depending on how much they make. Um, with self-directed IRAs, there's no combining accounts. So if a husband and wife want to open accounts, they have to be separate. Then there's no commingling of money. So if a husband wants to open an account and a wife wants to open one, it has to be separate. There's no joint accounts. Okay. But the contribution levels, again, that's based on the Roth is the one where it's really based on their income. And that's where they contact their accountant and see how much they're making a year to decide how much they can contribute. The Roth is the one where the contributions are limited on how much they make a year. Okay.
Okay. All right. Well, that was some great information. Like I said, I want people to try to look into these accounts to take advantage of some of these opportunities that are in some of these things that you mentioned that you can invest in. Maybe if it isn't real estate or something of that nature, maybe there's a business out there, maybe there's precious metals, gold, silver,
Yeah.
some other things that you may know a little bit more about, you may be more comfortable with, but you see an opportunity. So, and way that things are going and expectations in 2024 into 2025 is that there's going to be an opportunity to buy some things that have great value. So, in the categories that Jack did
Sure.
mention in his
Yeah.
presentation. So, we want you to take advantage of it, help you grow your retirement fund, and especially, something like for the kids, obviously college expenses are very high. And at least if you can, start to do something for them now, you can reduce that cost, by the time that they, are ready to kind of go to college and do some other things. And this can be used for high school tuition or even grammar school tuition as well. So a lot of things that you could do, a lot of flexibility. My one last question is with the Coverdale, let's say you do put it in, for your child and they
Hmm?
decide not to go to college. What options do you have with that account if you built it up over 10, 15 years and now the kid is 17 or 18 and really doesn't want to go to college, wants to
Yeah.
do something else? What options do you have with that account at that particular time?
As far as I remember, and I can send you information on that. Um, they have up until 18 years old where they have to move it out. I think they can transfer it to another child, or they could take it out and they can move it into a regular traditional IRA for that child, and go back to traditional investing,
Right.
or they can just distribute the money out.
Okay, so
And
they can move it into another account. It would have to
yeah,
be in that child's name though.
no, not necessarily. No,
Okay.
no,
Okay.
because
Cool.
that has to if I'm not mistaken, by 18 they have to if the money's not going, it has to be moved out.
Okay.
Uh, so, uh, but I have information about that. I can definitely get more information about that. Um, so yeah, there's so many things out there that these people can do.
Right.
Uh, people don't know that they can invest in crypto. They
Right.
can use their retirement money to do crypto, precious metals. A lot of people like to do lending. They like to be like the bank. They want to lend their money and do principal, interest, security on the note. You write up a promissory note, and now you are the bank, and so that's a lot of people do that. Most of the people we do are real estate. People like to do real estate investing.
Mhm.
Rental properties is big. They want to go out there, and they want to get into whether it's a fix and flip, a buy and hold, or they just want to be passive and get into a syndication.
Right. Or
Or
lending. A lot of people
or
can lend as well. So
yeah, yeah.
all
As long
right,
as they don't.
Jack. I appreciate it. Great information. Again, I'll be posting this on my social media. So if we do get anyone that, has further questions, they have your information here. I will definitely send them over to you. But I
Mhm.
appreciate the time and I appreciate all the great information. And hopefully we will, get some people over to you and, be able to do some deals with these people.
I appreciate it. Thank you so much for your time. And again, anything I can do for you, please don't hesitate to reach out to me.
Appreciate it. Enjoy the rest of your night.
You too. Thank you so much.
All right. Have a good one.
You too.